There's a video you've probably never seen. It was taken in a Japanese elementary school on the last day of the school year. The camera pans across empty classroom after empty classroom. Row after row of desks. No children. This isn't during a pandemic or some rare event. This is just a regular school in rural Japan in 2024. The number of students is so small, they've consolidated multiple grades into one classroom for years now. Soon the school will close entirely. When the reporter asks the remaining students how they feel, the answer is telling. They don't feel anything. It's normal to them. There's no community of kids their age. School is quiet. This is just what growing up looks like. What you're watching isn't a story about education policy or schools struggling to adapt. You're watching the visible symptom of an economic system in the process of collapsing under the weight of its own arithmetic. The schools are empty because the population is empty. And the population didn't become empty by accident. It happened because a developed nation did everything right. Women got educated, prosperity increased, career opportunities opened up, and people rationally decided to have fewer children. And now the entire economic system is breaking. Most people think they understand demographics. It's just the study of populations. Birth rates, death rates, aging, social stuff. Not really an economics problem. That's completely wrong. Demographics isn't social. It's the foundation of all economics. The entire global financial system is built on a single hidden assumption. Each generation will be larger and wealthier than the last. Remove that assumption and the system doesn't just slow down. It inverts. When you first hear that a country's population is shrinking, your immediate instinct is that this might even be a positive. More resources per person, less crowding, less competition for jobs. If Japan has fewer people, doesn't that mean more jobs available for the people who remain? Less pollution, less resource scarcity. The environmental benefits alone seem significant. Here's the part that breaks that logic. Economic systems aren't designed to work with fewer people. They're designed to work with more people. A growing population is baked into every financial assumption we have. Tax systems assume a workforce that grows over time. Pension systems assume more people working than retiring. Real estate values assume demand from a growing population. Debt is issued assuming future economic growth. Infrastructure is built assuming future demand. Stock markets price in future profit growth. Essentially, all of modern capitalism assumes growth. Now imagine what happens when that assumption flips, when there are fewer people entering the workforce than leaving it. When births fall below the replacement rate of 2.1 children per woman. When deaths start outnumbering births for the first time in centuries. It sounds abstract. Let me make it concrete. Think of the modern economy like a pension system, because in a lot of ways, it is. A worker earns income. A portion goes to taxes, which pay for pensions, healthcare, and infrastructure for the previous generation. The worker spends their remaining income, which creates jobs and growth. Eventually, that worker retires and collects a pension funded by the next generation's taxes. The system works as long as there are more people entering the workforce than leaving it. Here's what's actually happening in Japan, Germany, South Korea, and Italy right now. In 1960, for every person aged 65 or older in Japan, there were about 10 people of working age to support them. Today, that ratio has flipped to roughly 2 to 1. By 2050, it's projected to be closer to 1 to 1. One retiree for every one worker. Think about what that means mathematically. If a retiree needs $30,000 a year in pension and health care, and only one worker is funding it, then that worker needs to contribute roughly $30,000 to the system just from their taxes. Plus, they need to live on something themselves. This math doesn't work. South Korea has an even more dramatic problem. The fertility rate, the average number of children per woman, was 0.75 in 2024. That's not 1.5. That's 0.75. To be clear, the replacement rate needed to maintain a stable population is 2.1. South Korea is more than 60% below replacement rate. In 2025, South Korea had 250,500 births and approximately 680,000 deaths, more than twice as many people dying as being born. Every single year, Germany's pension system is approaching the breaking point. The ratio of people 65 and older to working-age people, 20 to 64, was 37% in 2022. By 2050, it's projected to be 50%. That means half the population will be at or above retirement age, and only half will be working age. And the working age half will be smaller than it is now. So you have a shrinking workforce supporting an expanding dependent population. Italy's fertility rate dropped to 1.14 in 2025. In 2023, there were 379,000 births and 661,000 deaths. The difference wasn't close. 0 births were registered in 358 towns and villages in 2023. Children simply weren't being born. By 2050, Italy is projected to lose nearly 5 million people. The common response from policymakers is, we'll raise the retirement age. People will work longer. Let's think about what that actually means. In Japan, the labor force participation rate for people 65 to 69 has already climbed from 35% in the early 2000s to 53% in 2023. They've already pushed people to work longer, and it's still not enough. You can't push an 80-year-old into a factory or a nurse into another 5 years of caring for patients without enormous human costs. And eventually, the age group you're pushing into the workforce also starts to shrink. Here's the part that creates a genuine paradox. Demographic collapse happens because countries become prosperous and developed. Poor countries have high birth rates, 6 or 7 children per woman, because children are free labor, economic assets, and insurance against poverty. They help on the farm. They care for you in old age. Contraception is unavailable or culturally taboo. Infant mortality is high. When a country develops, all of that changes. Women get educated. That education becomes a career. Careers mean opportunity cost. If you spend 20 years raising children, you can't be progressing in your profession. Children become expensive. You need to feed them, educate them, house them. Contraception becomes available and socially acceptable. Pensions and government safety nets mean you don't need kids as retirement insurance. So each generation, rational people with career options and prosperity have fewer children. Japan did this remarkably well. By the 1970s and 80s, they had created an incredibly prosperous society. Women had access to education and careers. Healthcare was exceptional. Pensions were sustainable. Standard of living was climbing. Every developed economy made this transition. And then the question no one asked was, what happens if everyone does this? Because here's the trap. A single country can develop and have low birth rates, and it can sustain itself through immigration. Or it can survive on the accumulated capital and investments of previous generations. But when all developed countries have below replacement fertility, you can't import younger workers from the developing world forever. And you can't live off accumulated capital when the total economy is shrinking. Japan experienced this transition first. The birth rate started declining in the 1970s. It fell below replacement rate in the 1990s. By 2011, deaths outnumbered births for the first time. For the past 13 years, Japan's population has been shrinking every single year. And here's the consequence that nobody talks about. Japan's economy hasn't grown meaningfully since 1991. For 33 years. That's longer than most people reading this have been alive. Japan had the second largest economy in the world in the 1990s. Now it's third, behind the US and China. Not because Japan became less productive or less developed, because the shrinking population means the overall economic pie is smaller. Let's see me trace through the actual chain of consequences that happens when a pension system meets demographic collapse. Step 1 is immediate. If more people are retiring than entering the workforce, and you want to keep pension payments stable, you have to raise taxes on workers. Germany is dealing with this right now. The payroll tax rate for pensions is already at 19.5% of wages. Proposals to fix the system suggest raising the retirement age to 73 and pushing rates even higher. Step 2 happens quickly. When you raise payroll taxes on workers, two things occur. First, they consume less because they have less disposable income. Second, the incentive to work and earn becomes worse. Why work harder and earn more if half of every additional dollar goes to taxes? Consumption drops. Tax revenue doesn't grow as expected. Step 3 is where the spiral begins. With lower consumption, businesses can't grow. They hire fewer people. Wages stagnate because labor supply is stable, but demand is falling. Young people, facing higher taxes and lower wage growth prospects, decide that having children is an even worse financial decision than their parents thought. The fertility rate drops further. Step 4. The government tries to fix the pension gap by cutting benefits instead of raising taxes. But if you cut pension benefits for people already retired, you create political chaos. You're telling a 75-year-old that their pension is being cut after they paid in for 45 years. So instead, you keep cutting benefits for future retirees, meaning the next generation gets even lower pensions, even though they paid even higher taxes. This further disincentivizes working and saving. Step 5. The government gets desperate. They start running budget deficits to pay for pensions and health care. They issue debt. But here's the problem. If the economy isn't growing, you can't grow your way out of debt. And if investors start to worry about repayment, interest rates rise. Rising interest rates make it more expensive to refinance debt, which balloons the deficit further. Step 6. With government spending consumed by pensions and interest payments, spending on infrastructure, education, and research declines. Schools close. Roads aren't maintained. Universities have fewer resources. This further stunts future economic growth and productivity. Japan has lived through all of these steps. The economy stagnated. Consumption declined. Investments languished. Real wages are effectively flat for decades, even as productivity increased. Young people have fewer children because the economic future looks uncertain, which accelerated the demographic decline further. There's a darker version of this story, which is China's. From 1979 to 2015, China enforced the one-child policy. The government literally limited families to one child, with exceptions for rural areas and ethnic minorities. The policy was enforced through fines, loss of employment, forced abortions, and other coercive measures. It was designed to control what the government saw as unsustainable population growth. What it actually did was create a demographic catastrophe on an accelerated timeline. China's fertility rate was already declining as the country developed. The one-child policy didn't prevent that decline. It just made it happen faster and more completely. By the time the policy was lifted in 2015, the cultural shift away from large families was already entrenched. Young people in China didn't have siblings. The cultural expectation of having children had shifted. Even when the policy ended and people were allowed to have more children, they didn't. China's fertility rate today is roughly 1.34, well below replacement rate. But China didn't have 30 years to gradually adjust to a shrinking population like Japan did. It happened over 15 years. The demographic transition was so fast and severe that the working-age population started declining almost immediately. In 2023, China had more deaths than births for the first time in 60 years. The working-age population has fallen for 8 consecutive years. The elderly population is growing at one of the fastest rates globally. China doesn't have the accumulated wealth and investments that Japan developed over decades of prosperity. China had growth and relative poverty, followed by a sudden demographic collapse. The economic consequences are only now becoming apparent. Chinese youth unemployment is skyrocketing. Young people are dropping out of the workforce because job prospects are grim. Women are increasingly stepping back from careers because the economic incentive to work is weakening. This accelerates the fertility decline further. The cycle reinforces itself. When demographers and economists talk about fixing demographic collapse, immigration is the standard answer. We'll just bring in young workers from developing countries to support the aging population. This is a politically popular idea because it avoids difficult conversations about raising taxes or cutting benefits. But the numbers don't actually work. To maintain a stable population and pension system, you'd need immigration on a scale that no developed country is politically willing to accept. Germany would need roughly 400,000 net immigrants per year just to stabilize its workforce. Japan would need about 100,000 to 200,000 per year. These are rough numbers, but they're in the ballpark of what demographers calculate. Can you bring in 400,000 immigrants per year into Germany without enormous social friction? Theoretically, maybe. In practice, we've seen how that's worked out. And even if you solve the political problem, you're just temporarily delaying the inevitable. The immigrants you bring in eventually age as well. If they have below replacement fertility, which developed countries in general do, you're just cycling through waves of immigration indefinitely, while the underlying population continues to shrink. It's a mathematically interesting solution to a mathematical problem, but it doesn't solve the underlying issue. Your society is structured on the assumption of population growth, and that assumption is gone. Japan is the canary in the coal mine. It's the only major developed economy that's been living in demographic collapse long enough to see the full arc of consequences. Here's what actually happened. Population peaked in 1995. Deaths started exceeding births in 2011. For the past 15 years, the population has contracted every single year. During this time, Japan's GDP has essentially flatlined. It's grown, but slowly, averaging less than 1% per year. The US, in comparison, averaged about 2.5% over the same period. You might think Japan would have experienced massive job losses and unemployment during this time. It didn't. The unemployment rate actually stayed relatively low, in the 2 to 3% range. How is that possible if the population is shrinking? The answer reveals something crucial. When the population shrinks, the entire economy shrinks proportionally. But employment can remain stable because there are fewer people. It's not growth. It's just smaller. GDP per capita actually improved. Individual living standards rose. Wages increased. But the overall economy, the total size of the pie, didn't grow. Japan's stock market, as measured by the Nikkei 225, took 25 years to recover to its 1989 peak. The real estate market crashed and never recovered. Young people couldn't afford homes because wages weren't rising in real terms. Consumption was weak. The government ran persistent deficits to prop up spending. Debt ballooned to 250% of GDP, the highest in the developed world. This is what demographic collapse actually looks like. It's not a depression or a crisis in the typical sense. It's not dramatic. It's just nothing. Growth stops. Opportunities narrow. The system becomes focused on supporting the past rather than investing in the future. Schools close. Hospitals have fewer patients but cost more per capita. Businesses can't find customers because the consumer base is shrinking. Real estate values decline because there are fewer buyers. Young people in Japan have reported the most pessimistic outlook of any developed nation. Many don't see a point in ambitious careers or having children. Why compete fiercely for a job in a shrinking economy? Why have children who you can't afford and who will inherit an even worse fiscal situation? These attitudes then feed back into even lower birth rates, creating a negative feedback loop. Here's the genuinely difficult part that nobody wants to say out loud. The demographic collapse that's now destroying Japan, Germany, South Korea, and Italy was created by the policies and circumstances that made those countries prosperous in the first place. Women's education, career access, and economic independence, that caused lower fertility. Expensive housing and childcare costs relative to income, that caused lower fertility. Access to effective contraception, that caused lower fertility. Secular values and the decline of religious traditions that emphasized procreation, that caused lower fertility. Generous government pensions that mean you don't need children for retirement security, that caused lower fertility. These are all good things. They created more equitable, more prosperous societies, and they created the demographic conditions for systemic collapse. You cannot have both high female participation in the workforce and high birth rates in a wealthy country. The incentive structure doesn't allow it. So what are governments doing? They're trying to raise fertility rates by subsidizing childcare, paying parents for children, offering housing subsidies to families with kids. South Korea has spent hundreds of billions on fertility incentives. It hasn't worked. The birth rate has continued falling. Why? Because the actual incentive structure hasn't changed. A woman in South Korea can either build a career or have multiple children. She can't easily do both. So she chooses the career because it's financially rational and culturally valued. If a government wanted to actually solve demographic collapse, it would need to do something radical. Restructure the entire economy to make having children financially sensible again. That would mean pushing women back out of the workforce, reducing career opportunities, cutting government services, creating economic scarcity. It would mean reversing all of the economic development of the last 50 years. No elected government is going to do that. So instead, they'll issue bonds to pay pensions. They'll slowly cut benefits. They'll try immigration. They'll tinker at the margins. And the system will continue its slow contraction. Some governments manage to create an immigration policy that works politically and mathematically. Japan and Germany successfully bring in sufficient younger workers to stabilize their workforces. Productivity increases faster than the population shrinks, allowing per capita living standards to continue rising. A dynamic equilibrium is found at a lower population level, but with stable pension systems and continued growth. This would require unprecedented political and social change, but it's not mathematically impossible. Governments muddle through a slow 50-year transition. Fertility rates stabilize at around 1.3 to 1.5 children per woman in developed countries. Immigration provides a partial cushion, but doesn't fully solve the math. Per capita growth continues, but aggregate GDP growth stagnates. Pension ages gradually rise to 70 or 75. Benefits are gradually cut. Real wages stagnate. The period from 2025 to 2075 looks very much like Japan's last 35 years, technically still developed, but with an overwhelming sense of stagnation and limited opportunity. The political systems break before the economic transition is managed. Governments facing impossible fiscal math and aging, conservative voter bases make incompatible promises, maintain pensions, keep taxes low, increase spending. Asset bubbles inflate and pop. Debt crises emerge. Currency crises destabilize. Mass emigration from declining countries accelerates. Economic activity in aging societies contracts more sharply than populations do. A developed nation experiences a genuine economic depression in the context of demographic collapse. Demographic collapse isn't a population problem or a social problem or a policy problem. It's a mathematical problem about who pays and who gets paid in a system that requires growth to function. The system was built on growth, capitalism, pensions, government budgets, infrastructure planning, all designed for expanding populations and expanding economies. When that assumption inverts, the entire apparatus breaks. There's no plan for a smaller tomorrow because tomorrow was always supposed to be bigger than today. And here's the part that makes this genuinely tragic. The policies that created this demographic collapse are the same policies that created prosperity, equality, and freedom. You cannot have modern standards for women, modern living standards, modern freedom and choice, and also have high birth rates. The two are mathematically incompatible. So we chose development over population. And now we're discovering that you need population to sustain development. Japan looked at this problem 35 years ago and chose to let it happen. The government subsidized child rearing. It didn't work. It loosened immigration policy. It didn't work. Young people still didn't have children, so they accepted the demographic decline. Now Germany, South Korea, Italy, China, and eventually the entire developed world are facing the same choice. And the answer is likely to be the same. We'll accept the decline because the alternative, forcing women out of careers, creating economic scarcity, restricting access to contraception, is unthinkable. Which means the next 50 years are going to look very much like Japan's last 35. Stagnation, slow contraction, wealth consumption without wealth creation, and a system focused entirely on sustaining the past rather than building the future.